Hello, this is Leon from Phoenix Home Guru, and today I want to talk to you about something that's very confusing and extremely counterintuitive, and that is the credit reporting agents credit report that is generated for you and will dictate your ability to qualify for a home. And this is a very complicated, convoluted subject, and often abused as far as repairing your credit and such. So let me just talk to you about that. There are three credit reporting agencies. It's Equifax, TransUnion, and Experian. And they all have their little algorithms on how they do things. And the credit reports are generated by each of them, and they'll have three different scores. For those of you who've heard the term tri-merge scores, that's where they look at all three credit reporting agencies, and then they take the middle number, and that's your tri-merge score. So you could have a very low score on one, a very high score on the other one, a middle score on the one, and that your middle score is the one that's going to count. Now, all the credit reporting agencies have their own algorithm, but it basically goes down to some basic things that they use to ascertain your risk to the lender. And that's the purpose of this. They're gathering all the information about your credit worthiness, how much debt you have, how you've paid that debt, how many times you've looked at your credit, and how many other people have looked at it, and your length of history is all factored in to calculating your score. Now, I got a little cheat sheet here, so you have to forgive me, but 30% is your available credit. So that's actually one of the quickest ways you can actually get your credit score up. You want to have your available credit available to you. So again, it's all about risk. So if you think about it, if somebody's maxed out on all their cards, maxed out on their car, and at the top of their credit limit, and they're trying to get more, that's kind of a risky position for any lender to start looking at. That's 30% of your score. So if you have one credit card and that credit card is maxed out, if you bring it down to under 20%, your credit score is going to go straight through the roof. That is a huge, easy way to fix your credit if that's an issue. And one of the first things we look at is your usage. Now, 10% is the number of inquiries. Now, the number of inquiries are important because a lot of people in the past, as they're having desperate times, they start loading up on credit. And they want to make sure that they don't have the numbers, all of this, change drastically as people acquire credit. So there are different types of inquiries, and supposedly if you do an inquiry within the same type, like if you're shopping for a car or shopping for a home, it's only supposed to ding you once. However, I've seen that not work in the past, so you have to be careful about that. Be very careful about doing hard pulls on your credit. A hard pull is something where somebody's actually checking your credit to give you credit. Things like those credit reporting agencies that offer you, well, actually Equifax, TransUnion, and Experian offer where they can do a soft pull and it doesn't harm your credit. Type of credit depends on what kind of credit you're working with. It's only 10%, so that was a little more nuanced, and that'll take a credit professional to really get into what the differences are between that, because it's going to be whether it's revolving or whether it's a home loan, whether it's a payday loan or what have you. So that sort of thing only affects it 10%. Here's another big one. 35% is your payment history. I have run into more times than I can count people that say, well, I've paid my things late. Everybody does. No, everybody doesn't. Pay your things on time. If it goes beyond 30 days, it is going to be reported and is going to drastically drop your credit rating. So you want to make sure that you pay way before 30 days because there's processing time. You go beyond 30 days, that's going to be on your credit for up to 7 years. We're going to get into credit repair later on and how to deal with it if you've made that mistake. But that's 35% of your score is your credit history. And if you're a lender, you want to know that somebody's actually has a history of doing the right thing. One of the biggest indicator of future performance is past performance. So that's a big one. And the length of the history. If you just got credit, it isn't as impactful as if you had that line of credit for quite some time. Also, the number of lines of credit you have also can impact your score. All of these things are very nuanced, and there are ways that you can fix different things as you find problems. Uh, we're going to get into a lot of detail with a credit repair specialist, but if you're thinking of fixing any of your credits, say you pull up your credit report, you find out that your score is below what you want it to be, don't start messing with it without professional help. For instance, if you pay off an old debt that's 5 years old, you decide to pay it down. Well, you just refreshed that and made it as new as if you quit paying for it yesterday. So you can't do that. You want to make sure that you do things properly. If you close down an old line of credit, all of a sudden the length of history becomes an issue because you no longer have that as showing. There's all sorts of little things that you think will help and end up destroying your credit. So make sure you talk to Adriana or I over at the Phoenix Home Gurus if you're in the Phoenix area, or a trusted lender before you start messing with credit. For those of you that have had debt collectors come and talk at you, the reason they're asking for $10, just any payment whatsoever, is because it makes it brand new again, and it starts over that clock. As time goes by, bad credit becomes less of a problem, and also medical debt is treated in a whole different range. So that is another issue. So again, the score is this is a simplified version of the score, and each of them have their own way of doing it. But the best thing to do is, especially if you're starting out, get a look at it, see where you are, get ahead of it. Do what is necessary to make sure that the credit reporting agencies are working for you, not against you. You don't want to challenge stuff that's yours, because that doesn't work anymore. That's how some of the unethical credit repair agencies work. They challenge everything, and it turns out to be just a nightmare, and they'll shut you down. So you really want to get a professional. We actually have a good professional in town that helps us out at no cost, as long as you use their lender. So this is, again, a complicated situation, something that you'd want to have some help with, but this is the basics on how the credit reporting agencies work, and how you may be able to work it around. This is Leon from Phoenix Home Gurus. We're going to be getting into much more depth on this, because this is a whole series into itself. Make sure you like, follow, or comment below. If you have any issues with your credit, please don't hesitate to give us a call. Thank you, and have a good day.